An open letter to the Board of Income has sparked considerable debate among Singaporeans following the proposed sale of Income to Allianz. Gerard L Pennefather, the chairman of Huntington Investments, has voiced strong opposition to the deal, arguing that it lacks both economic and strategic sense. Pennefather's letter, published on July 24, 2024, highlights the trust that 2 million Singaporeans have placed in Income for over 50 years and raises concerns about Allianz's track record and long-term commitment. Pennefather points out that Income's non-life business had an average combined ratio (COR) of 91% from 2021 to 2023, while Allianz Insurance Singapore Pte Ltd had an average COR of 234% during the same period. This means that Allianz spends $2.34 for every $1 in premium, compared to Income, which retains 9 cents per dollar. Furthermore, Allianz has cumulatively lost approximately 63 million Singapore dollar over the past 3 years, a stark contrast to the supposedly superior offering they are touted to provide. In financial terms, Pennefather explains that Income typically makes around 400 million Singapore dollars annually, except for the past 2 years due to restructuring. With a sale price of 51% at 2 billion Singapore dollars, this translates to a 10% yield for Allianz, meaning that policyholders' margins are essentially funding the purchase. Moreover, Allianz would gain access to the management of 43 billion Singapore dollars in assets that Income holds, along with the associated management fees, making the deal even more beneficial for Allianz at the expense of Singaporean policyholders. Pennefather also emphasizes the strong local leadership that Income has had over the past 30 years, with 3 senior local CEOs who have presided over a successful business. In contrast, Allianz re-entered the Singapore market in 2019 with a CEO lacking local experience, resulting in cumulative losses of around 63 million Singapore dollar over 3 years. Additionally, Allianz does not have a life insurance business in Singapore, whereas Income has been in the life business since its establishment in 1970. This raises further questions about what Allianz can bring to the table in this crucial area. If the intention behind this deal is to use Allianz to expand Income into the region, Pennefather argues that this is a misguided strategy. Allianz has been present in 11 countries in Asia for about 30 years, yet they remain insignificant players in most, except for Malaysia and Laos. Their history of capricious market commitments, exiting and re-entering markets like Korea, the Philippines, and Vietnam, reflects poorly on their reliability and long-term dedication. Pennefather also highlights that S&P Global Ratings has placed Income on credit watch with negative implications due to potential material changes in the shareholding structure, which could weaken the likelihood of support from the Singapore government. To mitigate the potential negative impacts of the deal, Pennefather proposes several guardrails to be embedded in the Shareholders Agreement, SHA, or Sales and Purchase Agreement, SPA, with Allianz. These include compensation for staff redundancies, maintaining compensation agreements with agents and intermediaries, renewing products on expiring terms and prices, a call option for Income shareholders to acquire the 51% stake sold to Allianz at the same price, and ensuring the chairman of the board is appointed by Income shareholders with veto rights on key matters. Pennefather further deciphers comments made by Allianz Group CEO Oliver Bate in the Business Times on July 22, 2024. Bate's statements suggest that future investments will rely on the business's generated cash flow, with an emphasis on direct distribution and reduced compensation for intermediaries. This shift may not align with Income's long-standing focus on protecting Singaporeans' lives and possessions. As Singapore approaches its 59th birthday, Pennefather finds the timing of this announcement particularly ill-conceived. Income has been an integral part of Singapore's fabric, and selling it to Allianz would be a betrayal of the trust that Singaporeans have placed in the company for over 50 years. Pennefather urges Income to stay local, continue serving Singaporeans, and preserve the trust it has built over the decades. This detailed news coverage aims to provide an in-depth understanding of the issues at hand and invites viewers to share their thoughts in the comments section. Do you think the sale of Income to Allianz is a good move? What are your concerns or support for this deal? Let us know in the comments below. Don't forget to like, share, and subscribe to our channel, 2230, for more updates and detailed analyses on important issues.